As of October 13th, the 3 month closing price of LME copper was $7,938 per ton, up 3.37% from September 28th. The main reasons for the decline in the copper prices are the rise in the US dollar index and weaker fundamentals. Specifically, in the background of inflation not reaching the target set by the Federal Reserve, the US Customer Price Index for September increased by 3.7% year-on-year, slightly higher than expected. This has kept the market in a somewhat hawkish sentiment, putting pressures on copper prices by pushing up the US dollar index. On the other hand, as of October 13th, visible global future inventories stood at 259,800 tons, up 13.03% from September 28th. This weaker fundamental situation has been dragging down prices. Looking ahead to next week, from a macro perspective, China's social financing data for September exceeded expectations. Long-term loans to residents increased by 547 billion Chinese yuan, and China's export data decreased by 6.2% year-on-year, with the decline narrowing. However, China's CPI for September was flat at 0%. China's economic stimulus measures were not as strong as expected. In Europe and the United States, the short-term rise in oil price due to the Israel-Palestine issue has kept the US dollar index at a high level. Additionally, market risk aversion has intensified and the US bond yields are still high. The strong US dollar and high interest rates has raised concern in the market about the suppression of future overseas refined copper demand, continuing to put pressure on copper prices. Overall, the macro outlook is bearish. Regarding the fundamentals, positive import profitability in China has led to an influx of overseas refined copper, resulting in a significant 45.9% increase in SHFE copper inventories since September 28. Meanwhile, domestic social inventories in China surged by 60.47% compared to September 28, reaching a total of 117,300 tons. Overseas, LME copper warehouse receipts has been on the rise due to the favorable pricing, and it's anticipated that the pace of accumulation may slow down in the future. In conclusion, expectations point to continued downward pressure on global copper prices in the coming week. Additionally, due to shifts in supply and demand in both the Chinese and European markets, SHFE copper may experience a round of downward correction. The spot copper Shanghai-London ratio remains high at 8.33, with prospects of narrowing, making short-term participants in LME and SHFE near-month arbitrage trading worth considering.